Hello everyone, welcome to GES News Today channel where we give you the best and the latest information you can get. Information that guides you in whatever you do, especially in your decision taking. The information are gathered from real life experiences, reading and research, and from others information that they have been given to us through their complaints to help them to resolve. So, we are going to give you today the 5 insurance policy disappointments. 5 disappointments you will get in an attempt to claim your insurance policy sum assured. Good. Before we go into that, we urge you to subscribe to this channel because we will be providing you with other insurance related content. An example is compare and contrast GES SIC policy versus NATS My Life cashback heritage policy. So if you want to know that, get to know about it and decide where to go, kindly subscribe and make sure the notification is on so that whenever it's out, you will be able to get the notification. Let's go right in. What are the 5 disappointments you get when your insurance is ready for claim? Good. First of all, let's inform you that insurance companies are interested in two main objectives. One of them is to take as much as possible from you in the form of insurance premiums, and also to prevent you from taking away from them in the form of preventing you from accessing your insurance claim through whatever ways and means, including finding clauses in the policy document to deny you your sum assured or whatever is due you. Some of them we can say it is no fault of theirs because it is explicitly stated in the document. Other times too, the fault is from them for hiding certain information from you. Now, these are the 5 main disappointments that you will get. The very first one is that the amount you will be getting when the sum assured is ready or when the insurance policy has matured is that the amount will be meager, very small, because inflation would have consumed it. This is because you did not include any automatic increase in the policy premium. What do we mean by that? You will notice that when you are picking an insurance policy, or those who are yet to pick an insurance policy, they'll ask you whether you would like to include automatic increase in the premium, which comes with automatic increase in the sum assured. So for example, if you are going for funeral policy or you are going for any childcare policy or whichever policy, and you did not include any automatic increase in the policy amount, what happened is that the sum assured is also constant. Now, let's take it like the sum assured you are picking, which is lucrative to you. Just an example is 10,000 Ghana cedis today. Now, because probably the amount you need for the funeral this year or 5 years is 10,000, or the 10,000 is okay. You will notice that in 10 years' time, 20 years' time, 10,000 cedis is just like today's 100 Ghana cedis, or at best today's 1,000 Ghana cedis. So you pay all the premiums. Now when 10 years time, 20 years time, 15 years time, and you are going for a sum assured and they give you 10,000 cedis at that time, which is equivalent to today's 1,000 Ghana cedis or 100 Ghana cedis, you will be highly disappointed. Let's take the second point. The amount will also be meager because higher percentage of your premium went into insurance and lower percentage into the investment component. Many people are developing the habit of picking insurance that provides some form of investment for them or their children, so that when it's time for school fees, high amounts at the university or whatever level, they'll go for this sum assured to pay those fees or to do whatever they want. Now, you will notice that it is not just an investment we are doing, it is insurance inside investment. So whichever amount they are deducting, a portion of it will go into insuring you, and a portion will go into what? The investment aspect. For instance, we have some policies like, oh, if you pick this policy for 5 years and something happens, you permanently incapacitated or you pass on within 2 years, we will give you 20,000. And then, so that is an insurance part. And then also, when your child is about to go to school or do that and that, we are going to give you 10,000 or 5,000. Remember that what they are giving you in case something happens is an insurance, and they are going to take part of the premium you are paying to do the insurance for you. So this is what happened. Within this same policy, they can tell you that if something happened to you, or if you like, we can make it such that if something happened to you, we'll give you only we'll give you 10,000, but if your child is about to go to school or some assured, will be this one, so and so. What it means is that if you are going for higher amounts in case something happens to you, means that higher amount of your premium is going to insurance. If you are going for lower amount in case something happens to you, means that lower part of your premium is going into the insurance. So sometimes people look out for the bigger things for in case something happens. Now, in case nothing happens, and you are not going for this sum assured for your ward investment or whatever, the amount you will be getting will be meager and it will beat your imagination. Now, let's look at the third one. You will not get your sum assured, and only your contribution will be given to you with or without some interest. So this is what happens. We have some policies inside the document. They will tell you that when you default in paying your premium and something happens, you will not get your sum assured. The best they can do for you is to give back your contributions to you. In any case, they have used your money for investment and get some interest on it. So sometimes people are not aware, they have salary cuts, or for whatever reason they are not able to pay the premium, or maybe some months ago they are deducting from bank. Some months ago they went and took all their money away earlier, and then for that matter, that month is hanging 3, 4, 5 years ago. When it's time for you to claim your sum assured, that is when you know that they'll refer you back. So in this case, you will be disappointed for not getting your sum assured in case something happens. Now let's look at the point 4. You will not get your sum assured and your contribution too will not be given to you because you have defaulted up to the duration mentioned in the policy document. There are some policy documents, they will state it explicitly inside that if you default for this number of months, this number of years, and something happens, forget it, you are not going to receive any sum assured. Unfortunately, the agents will not mention this to you when they are enrolling you onto the policy. So, unfortunately, if you suffer salary cuts, now that is very common, 6 months, 1 year, and the 11th month that you are suffering the salary cuts, the 8th month that you are suffering the salary cuts, and for that matter, you do not have even money to go and pay over the counter, and something happens, they will tell you, we are sorry, we can't help you. So, this will be a big disappointment to you. Now, let's look at the 5th point. Your partial withdrawal will be delayed because agents will lie to you that the required number of years that have been increased that the required number of years for the partial withdrawal have been increased. This is because they want to keep your money a little longer for interest before giving it to you. In some cases, the insurance company have actually increased the required duration for the partial withdrawal for the same purpose. Good. Now this is like a campaign period and post-campaign period. When they are coming for you for campaign to enroll you, they will tell you within 3 years or after 3 years you can do partial withdrawal. Now you will notice that when the 3 years is up and you want to go for partial withdrawal, sometimes the agents can lie to you that, oh, they have increased the period from 3 years to what? 5 years, and so you must wait extra 2 years. They want to achieve two purposes with this. One of them is that even if you claim your partial withdrawal after the 3 years and something happens in the fourth year, you are still entitled to your full benefits. What it means that you have taken with double hands. But if they manage to convince you that, oh, we have increased the duration to 5 years, and for that matter, you two have gone to comfortably wait and something happens in the fourth year, they only pay you your benefits and you are not entitled to the partial withdrawal, because the partial withdrawal applies to if nothing happens within that duration. That is one part. Now, the other part is that the more they keep your partial withdrawal amount with them, the more they can invest it and gain something on it. So, you will notice that in order to avoid these disappointments, you must make sure that you read the policy documents effectively. Don't rely only on the words of the agents. Take the policy document as your Bible, read all the clauses in it, and then work along with it, so that in case you are falling into such a situation, you will know what to do. For instance, if you know that when you default for 3 years or you default for 1 year, you may lose your insurance. In that case, if your salary cuts, you will make efforts to rectify the situation, especially when you are seeing the signs or you are seeing the dangers. Kindly subscribe for our next episode about comparing GES SIC Life policy and NAT My Life Heritage Cashback policy. Bye bye.